Hello, my name is Claudio Bustos. I'm the founding and managing partner of Bustos Tax and Legal. This is a law firm based in Santiago, Chile, highly specialized in tax matters. We basically provide all kind of tax services, tax advisory and tax planning services to companies in Chile. To a large extent, we provide services to international companies doing businesses in Chile. And this video is basically, recorded in English because it's addressed to all these companies, colleagues, and counterparts, who can watch us from abroad, all the colleagues that we have from our international networks, EDL, among others. So, of course, I'm sure that they are interested about knowing about the Chilean tax system, and the idea of this video is basically to provide you with a general overview of the Chilean tax system, the most important aspects, and features of this system that we have here. The most important things to have in mind, at the time of deciding an investment in Chile from the tax point of view in terms of tax burden, tax obligations and tax compliance and all of that. So, to start with, the corporate tax, so what is the tax paid by companies, doing businesses in Chile? Is at this time 27%. That is the general rule. I know it's a high tax rate. Because we know that the average, in the OECD countries is about 23%, is around that. But, here at this time is 27%. We are also sure, or at least have a reasonable expectation, that in the next years, this tax is going to be significantly reduced. So due to the change of government, change of tax policy and all of that, we expect that the 27% corporate tax is going to be reduced, or at least progressively reduced, through time for companies. And there is an exception, for small and medium-sized companies. For these companies, there is a 12.5% corporate tax rate that is being paid at this time, but it's only a provisional tax rate that they are paying because this is going to be paid only up to 2027. Then in year 2028, they're going to pay 15% corporate tax. And as from 2029 and going forward, they're going to pay 25%, which is actually the normal tax that is levied, on these kind of companies. It's also very high. It's a huge tax, in my opinion, for small and medium-sized companies. When we talk about small and medium-sized companies, we are talking about companies with revenues no more than approximately, to $2.5 million or euros is kind of the same at this time, in a period of 3 years as an average. This is measured as revenues, as an average in a period of 3 years. So it cannot exceed, from 2.5 approximately, revenues in dollars or in euros. So that's kind of, of the cap revenue that these companies may have, in order to keep the reduced tax rate and to keep in the category, of small and medium-sized companies. But other than that, the corporate tax is 27%. And at this time, we have in Chile something that is called, a partially integrated income tax system, which basically means, that at the time the profit is paid as a dividend out, to the shareholders, talking about shareholders, domicile abroad, with residence abroad, either individuals or companies, whatever, they are subject to a 35% withholding tax. But against this 35% withholding tax, they are entitled, to deduct 65% of the corporate tax that was actually paid by the company on the profit that is being paid as a dividend, to these shareholders. So out of the 27% corporate tax that was paid by the company, shareholders are entitled to deduct 65% of that, from the 35% withholding tax that they are subject to in the case of dividends, paid to them. So at the end of the day, that basically means, that the overall tax on the profit, produced by the company after this profit has been paid as a dividend to the shareholders is 44.45%. It's also a very high tax. Now, the good thing is that we have double taxation treaties with several countries. Actually, I I would dare to say, that with most countries we do have double taxation treaties, like with Brazil, Spain, Argentina, the US, Canada, Mexico, Ireland, England, Italy, Australia, well, with several countries, India, we do have double taxation treaties with several countries. So the case is that the situation is that when shareholders are domiciled or resident in a country having a double taxation treaty with Chile, like the US, for example, or Canada or Mexico, in that case, they are entitled, to deduct from this 35% withholding tax on the dividend, the full corporate tax that has been paid, by the company paying the dividend. So this 27%, that was paid by the company as a corporate tax on the profit is fully deductible, from the 35%, that is paid as a withholding tax by the shareholders, by the non-resident shareholder. And that basically means, that in practical terms, they are paying an 8%, withholding tax on the dividend. And that basically means an overall tax of 35% and no more than 35% as an overall tax on the profit produced by the company after this profit has been paid out, as a dividend to the shareholder. That is what means, having double taxation treaty with another country and having these foreign shareholders, being domiciled in these countries having the double taxation treaty with Chile. The qualified exception about this, is Germany, unfortunately, and it's a shame because with Germany, we don't have a double taxation treaty at this time. So any shareholder in Germany, they're subject to the general rule, which means basically that they're going to end up paying, the 44.45% as an overall tax, after dividend is paid to them, because, well, the company is going to pay, the 27% corporate tax, and then against the 35% withholding tax, they are not going to be able to deduct the full 27% corporate tax paid by the Chilean company, so only 65% out of that. So that means basically, at the end of the day, 44.45% as an overall tax, on the profit produced by the company, when the profit is paid as dividend, to the shareholder domiciled in Germany. It's a shame because it's a qualified exception because we do have a lot of commercial, exchange and activities and everything, with Germany. So, and it's absolutely, uncertain at this time whether we are going to have or not in the near future, a double taxation treaty with Germany. I wouldn't dare to say, that this is going to happen soon or not. We don't know. But for sure, it would be great, if we may have this double taxation treaty, as soon as possible. Well, on the other hand, in terms of withholding taxes, normally technical services paid abroad, out of Chilean company are subject to 15% withholding tax according to domestic Chilean income tax law. But when we do have a double taxation treaty, with the country that is receiving, this payment, normally these payments are going to be subject or are going to be treated according to Article 7 of the double taxation treaty, which basically means a business profit. And that means basically that this is not going to be subject, to withholding tax in Chile. It's going to be taxed only in the country of residence of the company, receiving the payment, as long as this company, of course, doesn't have a permanent establishment in Chile, and etc. So basically, it's either 15% or non-tax, based on the double taxation treaty in case of payment of services, technical assistance services, or engineering services and all that. For interest arising from loans, and other financial operations, well, we do have a 35% withholding tax. This can be reduced up to a 4% withholding tax when the creditor is a bank or a financial institution or an insurance company. But in these cases, we do have a thin cap rule. This thin capitalization rule is basically that the total leverage of the company cannot exceed, 3 times the equity of the company. So otherwise, if this is exceeded, any interest paid in excess of that arising from this debt is going to be subject to 35%. And this, the difference, between the 4% and the 35% must be paid by the Chilean company, not by the foreign investor. So for the foreign investor, the 4% remains 4%. But yeah, the remaining part, must be paid by the Chilean company, up to the 35% in case of excess of leverage. And also, well, be careful about structure, loan operations, which basically means, back-to-back loans. When we do have back-to-back loans, when the interests are actually being received, not by the bank, but by the real, related company abroad, which is backing up the loan, which is providing the collateral or whatever, letter of credit, for purposes of the credit. And this is the one, receiving the interest arising from the loan. Well, then you are also going to have, the treatment of the 35% and not the 4% withholding tax, which is according to the income tax law. In terms of VAT, well, our VAT rate, value-added tax rate, is 19%. Services provided, by Chilean companies to companies domiciled abroad, to entities domiciled abroad, as long as these services are basically rendered in Chile, totally or partially rendered in Chile, and used abroad, they are considered as export services only to the extent, these services have been qualified as export services by the National Customs Service, as in this case, and in this case, there's no VAT levied on that because they are considered, as export services. And our VAT law, of course, is very territorial. So basically, any sale of goods, located in Chile at the time of the sale, well, it's going to be subject to VAT, either real estate properties or movable property. And if not, well, not subject to VAT. Anything that is sold abroad, but while being abroad, is not subject to VAT in general. And services are subject to VAT in Chile as long as services are rendered or used in Chile. If services are rendered or used in Chile, well, in that case, are subject to VAT. The exception, as I have said, is the case of export services, which, even though being totally or partially rendered in Chile, are used abroad entirely and are provided, to a non-Chilean resident party, and also qualified by the customs service, as an export. Well, in that case, it's an export service that is not subject to VAT. Well, this is basically a general overview, a very general summary and overview of the Chilean income tax system, for all people watching us from abroad, our counterparts, colleagues, members from the networks that we belong to, especially ETL Global, so that they may have, a general view and summary of our Chilean tax legislation. So, well, it has been a pleasure talking to you as usual, and I'll see you next time. Bye now.